Hey there, YouTube family. Welcome to the Stocks with Josh show. Say hi in the comments and hit the like for me. All right, guys, this has come down to this week. It's going to be a big week in the markets. Is the midterm election going to give us a bearish moment in which the markets are just going to drive down till the end of this year, making all the bears big bucks? Or is it going to be an opportunity for a midterm gridlock bear market rally, pushing us up till the end of this year, pushing our problems in the stock market till next year in 2023? Well, historically, when there's been a midterm election, it's been very positive for the markets. The year after the midterm election, so this January to the end of next year, the markets have on average gone up 17% after a midterm. And the year of the midterm, so from right now till the end of this year, the markets have gone up on average 6.2%. And so yes, typically midterms do mean market rallies. But the question is, are we going to get one this year? So what does the smart money think of this potential gridlock rally? Well, the CME futures, which measure the S&P 500, have seen a shift from equity fund managers increasing their long position, so going long, a bullish move for the S&P, and decreasing their short position. So they've been viewing that the risk would be to be too bearish right now. So that can change from week to week. And that shift occurred just the first week of November. They took off some of their short positions and they added to their longs. But if this market does not take off after the midterm elections, then they'll just simply pile back on and go short. So even though we have to wait and see what the markets are going to give us for the midterm election, it's not going to slow us down from trading. There's always opportunity to make money each and every day in the markets. And on that note, I began to notice early on this morning that there was a huge uptick of conversations about the Disney stock on StockTwits and Twitter. Now, you guys know that I've got Disney in my long-term retirement account, but I felt that this might bring me an opportunity to do a swing trade on Disney options. And I posted in the community tab that I got in around $99.60 and that my plan is for it to go through earnings tomorrow and possibly get to 105 to 108. This will be the first time that I've told you guys that I'm holding it through two earnings because I believe that there is a strong chance that Disney will beat expectation. And the consensus earnings per share is 56 cents. Now that is a 51% year over year increase. And even though that sounds impressive, unfortunately, the last 2 years have been pretty bad for Disney. On that note, analysts have lowered their earnings over the last 12 months 18 times, but they've actually been raising their revenue estimates 19 times. Disney has beat earnings per share expectations 75% of the time, and they beat the revenue expectations 63% of the time. So in general, it's always been good to bet with Disney, not against them for earnings. Now, we also got a little bit of a bullish news story when Netflix earnings came out here very recently, and they showed that there was still a very positive demand for entertainment. That's also a bullish reason for me to go long on Disney through the earnings. Now, bearishly, the potential upset negative surprise that we might see is the potential of negative news regarding the fear of continued lockdowns in China and the potential loss of revenue there. But that's the Disney trade in a nutshell. And if you like to follow me along, then don't hesitate. Hit the like, the subscribe, and hit that bell. And I will be giving you guys the notices of my stock and crypto calls. All right, the next stock I'm going to talk to you guys may come as a little bit of a surprise. This stock has been a dumpster fire in the year 2022, and that is Shopify. Shop, S-H-O-P. But what really, again, brought my attention to this story that I think all of us should take a minute and look at it again was the CEO came out here yesterday and bought 10 million shares of his own stock in the open market. And in my opinion, that tells me a lot. You got to remember that this guy runs the company. All the accountants report to him. They're looking at what they could potentially achieve. And he's made a decision. He's like, you know what? I'm going long on my own company. I know that we can beat expectations moving forward. We don't deserve the beatdown the market gave us in 2022. So I'm going to put my money where my mouth is, and I'm going long on Shopify. I'm going to do my own review of the fundamentals with you guys. I'm also going to go into the charts, and I'm going to tell you guys what I'm thinking of doing with my money regarding Shopify. You do what you want to do with your money. Do your own due diligence. This is for educational purposes. But I'll tell you guys, I'll just cut right to it. I'm going to follow the CEO and I'm going to put some money in Shopify. So the bottom line is this: the stock is down 90% for 2022. And here's the question: why did Shopify sell off, and why did it do so badly compared to other stocks in the space, even like Amazon, which has performed so much better? Well, the big answer is that they had significant growth deceleration. They had the big COVID pop, but later it ended up with a big drop. So I'm going to show you guys this chart of the revenue growth year over year for the last 4 years. So in 2019, they had a 47% growth in revenue. Then in 2020 was their big year, their big spike up to 86% in revenue growth. But then the following year in 2021, it fell off and they only achieved a 57%. And then what really gave everybody the scare was that this year they only had a 20% revenue growth. So after they saw that massive uptick, everybody piled into the stock, driving the price up to record highs. And then when they lost that momentum, everyone's piled out of the stock, dropping it down to record lows. So what exactly caused that deceleration in sales? Well, a lot of people speculate that it was their reliance on Facebook and Instagram's personal data acquisitions that Apple had shut down through their new iOS privacy changes. So they lost access to a very valuable stream of data, and because of that, they began to see a huge fall off in their sales. What basically happened is that Q3's earnings were really bad, and it took everybody by surprise, and it confirmed to everybody that all the momentum that the company had previously had, that they've now lost. And then at that time, they said, guys, in Q4, we're absolutely going to outperform the US retail market, but nobody cared because it was punishment time. It was time to beat the stock up and drive it down. But now that the stock has been able to process the aftermath of the market's disappointment, are we now at a place where we could possibly have a turnaround story? Is the stock ready to move back up? We've got Q4 earnings that are ahead of us on February 14th, 2023. And I believe that there's going to be even a bigger opportunity down the road then. But I want to look at trading Shopify from now until those February 14 earnings, because I think that that's often when the smart money gets in. They get in way before everybody else. And if the worst is behind us, it means that the biggest opportunity to take a position, if you're ever going to take a position, is going to be between now and February 14th of 2023. That's what I'm going to be looking at. The earnings expectations for Shopify in Q4 are going to be a negative 0.2 loss. Now, I want you guys to check out this earnings history and projected growth chart. Analysts are absolutely expecting a swing. We had a swing down, and they're looking for a swing back up. And that negative 2 cents is right on the line of loss and profit. And so if Shopify came out in Q4 earnings and actually showed a small profit, that would be monumental. And I think the stock would do very, very well. And anybody that accumulated it in that accumulation zone that I'm always talking to you guys about would be handsomely rewarded. Up next, I'm going to share with you guys the 35 analysts who are currently covering Shopify, where they think the stock might go down to and where they think the potential is moving forward for the stock to go up. And then I'm going to take you guys into the charts so that you guys can see how I've justified taking a position in this company, where I think my risk to the downside is, as well as my opportunity to the upside. But before I do that, if you guys are not part of my MooMoo community, check out this offer. This episode is brought to you by the MooMoo investing app. If you guys want to get 15 free stock on a free to trade, no commission cost mobile, iPad, or desktop app, then sign up. All you got to do is put $100 on the platform. It's free to use. You get 16 hours of trading, free level 2 data, plus you get to join the Stocks with Josh community page as well as our group chat. All 15 free stocks have a potential value of up to $2,000 each. The pot is $30K. Check the link in the description of the video and join us. What do the analysts say about Shopify stock? Well, there are 35 analysts that cover it, and their median price projection over the next 12 months is $40. We're sitting at $32.50 right now. They have a high estimate of $60 and a low estimate of $28. So we've gone all the way down to that low and we've bounced. And what appears is that we have the potential of at least a 24%. And the takeaway there is that we have a lower risk to the downside, per the 35 analysts, then we do have a much greater opportunity to the upside. Okay, so what do the charts say? I want to point out right off the bat that we're sitting on the historic support range of $32. We briefly broke below down to the $28 range, but in recent days, the technicals have gone bullishly in Shopify's favor, and we've recaptured that $32 range. And I believe that there's opportunity for the big targets ahead. First target 1, $40, target 2, $50, and target 3, $60. The bottom line is that Shopify is a beat up sleeper. A lot of people have walked away disgusted by the near 90% drop that Shopify has suffered, but it's often at that time where there's opportunity. We also see that if we look at Shopify over the last couple of years, it sort of meets the criteria of going through our stock cycle. We see that accumulation, that markup, that distribution, and that decline phase. And now it's no longer a falling knife. It's hit this low, this historic low of this $30 range, and it's been moving sideways. That's what we want to see, because in that sideways movement, we may have established a reaccumulation phase. That's why I call it a sleeper beat up stock, because it went up, it's come down ridiculously, and now it's stopped going down and it's moving sideways. And this is the time frame that most people forget about it, but this is when the smart money swoops in. But because we are in a risk-on environment, we definitely want to play this one with a stop loss. If you wanted to play a loosely drawn stop loss, you may consider $29. And if you wanted a slightly higher or tighter stop loss, which could kick you out, so you might have to get in and out, losing a little bit with those trades, you might consider a $30 stop loss. I also want to point out that the RSI is showing a bullish divergence, as well as the other factor that we are in the bullish upper 50% band. I've told you guys many times that means that the bulls have charge of this stock right now. We want to see it stay in that band area. We want to see it come back and bounce repeatedly off that 50% line and stay above in that zone. So Shopify is basically time traveled back to its 2019 prices. We see what the story is. We see how beat up it is, but we also see a CEO who's gotten back behind it with his own position of $10 million. It's on my watch list. I'm not telling you guys to jump in and dive into Shopify. I'm simply telling you, put it on your watch list. As I learn the stock and trade the stock, I'm hoping to get a bunch of bags off of this, just like I did Norwegian Cruise Lines. These type of situations could have some very volatile moves and produce really profitable environments. And on that note, I'm going to tell you guys the next video that I'm going to be talking about is AMC. And I don't cover AMC because of the hype surrounding it. There's a ton of YouTubers that have a big following of people that love to hear about AMC. I'm telling you that the reason I'm going to talk to you about AMC is because I simply see a technical opportunity in the charts that I want to bring to your guys' attention. I've actually never done a more thorough deep dive on AMC. That's the next video I'm going to do. You know you got to hit that bell. If you do not hit the subscribe and the bell, you're not going to be part of the conversation. But let's continue the conversation here in the comment section as well as over on the MooMoo app. Thanks for joining me today. Peace and blessings, my friends. Take care.